Hello and welcome to the Konvergent Video Series for the week of September 21st. Top three things we're going to cover on the video this week. First, the markets with its third down week in a row. Two, a lot of economic data released last week and a lot of mixed results there. And finally, we're going to touch on some political implications to all the volatility that we're seeing right now. But before we jump into the data, I just wanted to say I hope you all had a great weekend. We had a great weekend here in the Pacific Northwest. We finally had some rain come in and knock out a lot of the smoke that's been lingering from a lot of the West Coast fires. And Sunday night was a great night for Seahawk fans. Big win over the New England Patriots. Normally I would have been at the stadium, so probably good things for this video. I still have a voice left, which had I been at the stadium with the way that game ended, I don't know that I'd have much of an ability to do this video this week. But on a more serious note, this weekend also brought us news of the passing of Ruth Bader Ginsburg. One of the most important figures in Supreme Court history, only the second woman appointed, and a huge advocate for women's rights and gender equality. And while normally we should be spending more time talking about her legacy, really with the elections coming up and how contentious that's going to be, this has already become probably the most hot button issue that we'll be following here in the coming 6 weeks or so. But as we jump into the data for the week, market was down again. I mentioned for the third week in a row, finishing down on the S&P for just over 0.5%. However, early in the week, it looked like we might be seeing a decent rally coming in the stock market. But following the Fed and along with other economic data released late last week, the market crashed kind of the last couple of days and again finished down just over 0.5%. And volatility really seems to be the news this week as well. On the economic data front, on employment, we saw some reasonable improvements on new claims for unemployment. The state claims were pretty flat, but we did see a drop of over 200,000 in the pandemic claims, but still combined over 1.5 million of total new claims for unemployment last week. On continuing claims, they were pretty flat, just over 12.5 million, and total claims still coming in well over 29 million. So while we are seeing some slight improvements there, still nothing that's getting us overly excited about where things are headed here in the coming weeks and months. Other economic data that we're looking at last week, first retail sales, a slight up 2.6% year over year on the numbers released last week, and a little bit up month over month, however lower than expected. And so again, while we are starting to see some minor improvements there, it's still not looking like anything of a V-shaped recovery. If we look at New York specifically, our biggest metropolitan market, those numbers are even worse. So since January, total spending in New York City is down over 12%. And obviously the hotels and restaurants hit the hardest, down over 35% in that area alone. Grocery sales up reasonably well, which you'd expect with people stuck at home, but still a pretty troubling report in terms of total spending in our largest market. Another number released last week is industrial production. So similar to retail sales, we saw some minor improvement month over month, but still year over year on industrial production, we're down over 8%. So when you look at it as a whole, while we are seeing some minor improvements in the economic data, in terms of the rate of change, it's beginning to slow, which gives us some concern over where things are headed here in the near term. So back onto elections and volatility and everything that's going on right now. Election years always bring a lot of headline risk coming into election day. However, this year we've already had enough other big news that's made it even more volatile. And then obviously with the passing of Ruth Bader Ginsburg, we now have a new hot button issue. President Trump just announced he plans to make his nomination before the end of this week. And so clearly what was already a contentious election is only going to continue as both sides are really going to dig in on their positions around the Supreme Court. So, bottom line, when you look at things overall, we've been expecting over the last couple of months for economic data to begin to slow down, and we are now seeing that. And also with the market basically going straight up for 5 to 6 months since late March, at some point we're going to need to see some sort of a reasonable correction, and we're starting to see that now. And the big question is this just a healthy correction that a market going up in a bull market needed, or is this the beginning maybe of a more troubling sign in the markets? So for good reason, we've been more defensive in our portfolios overall, and we're going to continue to be that way, at least for the foreseeable future. So as always, if you have any questions about your individual situation, please feel free to reach out. Otherwise, we hope you have a great week, and we look forward to talking with you soon.